Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look again at euro currency. So the recent week was rather contradictory because it's different thoughts and rumors stands on the market concerning the United States-China negotiations on the tariffs, and it's a bit really a rational view, but our thought now is dominating on the market. So the market widely suggests that if it's really some tariff spiking will increase, that should negatively impact on the United States economy and forces the Federal Reserve to cut the rate close to the end of the year. So this is, we think that this is not very logical and it's a bit irrational view by many reasons. And we do not see the confirmation of this idea in real facts. So for example, just one example, if you'll take a look at the Commitment of Traders report, you will see that no short covering has happened in the last week. So the overall net short position stands the same, and it even has been slightly increased, just a few contracts, but investors keep shorts on the euro. Overall price action technically also looks heavy, and as we talked about it through the last week and within daily videos, it doesn't correspond to normal behavior that market should show if it shows the upside bullish reversal. So besides, we have some bearish patterns that were formed on the technical side. So this is grabber that we got 2 weeks ago, and by the result of this week we also have bearish grabber on the weekly chart. So that's also important. What does it mean? We do not deny totally the possible short-term upward action here. So long-term view is a long-term view, so it's mostly spreads on longer-term perspective within a few months, on even year, and the fluctuation about the 100 pips, it's nothing in the scale of the long-term view. In the shorter-term perspective, we should be extra careful because by the two reasons. So first of all, our forum member Stag that we actually mentioned this in last week provides the elliott waves analysis on the market, and he gives the 3 different scenarios, but all of them suggest that market should climb to the 1325 area. Actually, this is the previous stops. That will be the decisive moment. So this is a crucial point. After that, the major direction should be estimated. It will be either to the upside with a big ABCD pattern, or it will be downside reversal and market starts dropping. So our technical view is a bit even shorter term, and now we're watching for reliability, whether this upward action to the 1325 will happen at all. Because currently, as I said, we have grabber daily here, we have weekly grabber at this point, and this is the question yet whether the market will continue upward action here or not. We have some doubts on this. At least we need to keep an eye on some patterns that we discussed right now. That will help us to estimate the short-term direction on the coming week. So on the daily chart, nothing really has changed. Market actually, the Friday action stands in the same range as was on Thursday. And the patterns that we talked about within the week are still valid. So for example, if you take a look at the 4 time frame chart, take a look what we have. Our guard is triple to sell, still valid. AB equals CD. OP target has been hit here. Butterfly has been hit here. In market with this climb up, this is for me it looks like a kind of the weakness on the market, and that could be treated as a wash and rinse of this top, because as you will see on the hourly chart, that is not quite the action that should happen in the current circumstances. Also on the 4 time frame chart, I show you the ABCD pattern that we potentially could get if our suggestion on the bearish reversal will fail. Or better to say, not the suggestion, but the context that still currently exists. But if it will fail, we should be ready for upward action, at least to the 113 area, but even then it could be even higher to the upside. And that actually, guys, when the market stands right now at 1250, is a crucial point for a common week. Here is why. On the hourly chart, guys, market has hit the OP target, this butterfly. That was reaction on the OP target. Action here was really fast. That was a retracement, and that theoretically should become the upward continuation to the XOP target. This is just how market behaves. So A, B, C bottom, COP, reaction here, OP, retracement, and now market should continue action to the XOP. The stop here, this pause and downward action, looks not quite logical. And here we have the bearish divergence with the MACD, and take a look. It's kind of the wash and rinse. So market just spike here, previous stop, and drop lower. So it looks like that just stop grabbing above this area. Our major guideless triple to sell is also valid. And from that standpoint to you, we need to keep an eye on this construction that you see right here, because it reminds kind of the hand shoulders pattern. From that standpoint to you, we need to keep an eye on the possible hand shoulder shape. Once it will be formed, we could use the top of the right arm and possible guideless triple to sell that could be formed here as a potential opportunity to go short, because it provides perfect opportunity to go short here. This is first task that we should complete on the common week. The second, we are interested with this hand shoulders in general, because that will be the pattern that could clarify direction. Once head and shoulders will form, will start to work, it will support the idea of the both grabbers on the weekly, on the daily. It supports the idea of the triple to sell on the follow time frame chart, and in general, it works like reversal pattern to the downside. In this case, we could get, for example, butterfly on the daily chart. So that could become the left wing of the butterfly. That could become the right wing. In this case, the target will be 1070 approximately. Oppositely, if markets will form the right arm and then turns up, taking out of these tops, climbing higher, that will be all clear. So it means that bearish context has failed, and we start to watch for upward continuation and action right to the 1325 area that Stack has mentioned in his update on the last week. So overall task is not really very difficult, especially as we have the clear pattern to watch for. And we just need to be careful and be prepared for both directions, and take a look at the 1250 as some kind of the border between the bullish and bearish context. Once hand short starts to work, market drops below 112 area. Bearish context starts to work, and we should be ready for a downward continuation. If hand shoulders will be formed and then fail, the market move above the head, that means that the bullish context starts to work. No bearish position should be taken, and market is coming high to the 113 and 113.25 area. So not really difficult. Personally, guys, I'm gravitating more to the bearish scenario by the just moments that I saw in a fundamental background on the current situation. But fundamental, it's a bit longer term. Downward action could start from 1325, and longer term factors could start to work from according to Stack scenario. That's also possible. But anyway, from technical point of view, as I said, hand shoulders will be very good pattern to keep an eye on. That could clarify the direction, and it makes it clear what context starts to work.